how can they be raising rates if the predominant regime is to lower them over the course of the medium term to even longer term?
Yeah, that idea of raising rates, Dominic, is a little bit of a bridge too far at the moment anyway. But it is true that the economy is stronger coming into the year next year than we had previously thought, and that inflation will probably hover between 2.5% and 3% for much of the year. That's not bad for stocks, actually. The Fed, for its part, is more worried about letting rates stay too high for too long as the labor market softens. So they have that to consider as well.
If that's the case, how much is this market going to have to be dependent in some way on interest rate cuts? We know that the markets feel as though the incoming Trump administration is going to be more business and economy friendly. It's part of the reason why we're seeing risk assets do so well. What exactly then derails that? Or does the Fed even need to be an active participant in this market cutting rates for this economy to do well?
Yeah, I mean, the Fed has a lot to watch next year, and in many ways, they're going to be like us, watching to see what policies get implemented with what timing. That's very important. They could have tiered tariffs or phased in tariffs. Those might not end up hitting the economy with inflation till late in the year. At the same time, if you have deregulation and tax cuts, let's say developing earlier in the year, that could be a net positive for policy on the year. So Chairman Powell, like the rest of us, probably stuck watching to see how policy develops. But the economy, we think that's a surer bet. We do see strength coming into the year. We think that strength endures. And as rates have come down already, that should help those consumers, low-income consumers, small businesses, and manufacturing that have been the laggards so far. So that broadening economy, then broadening recovery, broadening growth should be good for stocks going through most of next year.
Paul, broadening economy is a good thing. A broadening market is also arguably a good thing as well. Does that trend continue? Do you think we start to see and continue to see other stocks besides mega cap technology take some kind of a modest leadership role?
Yes, that's a great question. And we do expect cyclicals to play more of a role next year. Cyclicals being those sectors of the market that are most closely tied to the economy's improvement. And so as that happens, we like industrials. We're already positioned there. We like energy. We like financials, again, already positioned in those two. And we've taken a position in communication services, looking for some improvement there, some better growth there. If in information technology does make a pullback, we would be interested there as well. But again, the focus is going to be on that broadening economy and broadening market, as you say, to include cyclicals for next year. Oh, I should also mention small caps. As the economy broadens, we should expect small caps to really start to do much better than they have been lately.